Good evening and welcome to our US Weekly Markets Review brought to you by SG Futures. Coming at you today on Sunday the 7th of February 2021. We're going to do a relatively short video this week, but where we want to start this week is on a slightly different screen. We're going to do things in a little bit of a different order. So we're going to touch on what we talked a little bit about last week and just really show how this week played out in comparison. So we were doing our video last week. We talked a lot about this particular profile in here, which is from the week commencing the 25th of January. And we talked about how the close to the week was a little bit on the bearish side. And we had closed back inside this white box in here, which was a perceived area of balance. And we closed in there, and it potentially paved the way for a test of the midpoint down here and the low end of the balance area down here. But we did say that if the futures opened positively and we saw some sort of positive momentum in the European session on Monday, just gone, then we would be more likely to start to retrace this move down and start looking at some levels back to the upside. And that's kind of how it played out last week. And we're going to get into this in a little bit more detail later on in the video. But one of the things I really want to mark out is that the early part of this week, which we will just mark out in here, is the low end of the profile in here. So the low end of this particular profile in here and the low that was put in corresponds with the high of the value area. So this is all of these TPOs are from the RTH regular trading hour sessions. So during the Globex overnight period, we had some real positive momentum on Sunday night. And on Monday, we opened up here and we traded down and we never really got below the sort of 37.20 mark. And we put in a low pretty much in and around the very top of the balance area. I think it was actually 37.20 if I'm to just check it or just eyeball it. It was 37.18, 37.19. But so that was significant, and we could tell pretty early on Monday that things were potentially going to be a little bit more bullish than we had thought when we were coming in. Now, one of the things that I really want to call out this week is when we talked about in last week's video, this box is still here from last week's video. And what's really, really interesting is the later part of the week just gone, which is this set of TPOs in here. This particular box in here, the low of this particular move corresponds with the single prints from this profile over here from the week commencing Monday, the 18th of January. So we had a gap in the market in there. We had a potential area that hadn't been terribly well filled out from a volume and time perspective. Now, what we're trying to demonstrate on the video here, what we're trying to show is that the market remembers these types of levels. And we had, when we put in a low down here, I think it was roughly 37.99 or 37.98 thereabouts. When we put in that particular low, it corresponded with this set of single prints which are marked in this sort of dotted white line in here. We were able to see when we zoom out into the weekly view like this that the market's really respecting that particular area. So it's filling out and it's auctioning these prices to make way for a potential move higher. So that's something really, really interesting we want to try and carry into this week. If we jump across into our daily RTH candlestick chart, we can see here that on Monday, this is where we opened in here. And we talked about last week that we'd come off the 50-day moving average. We opened in and around this sort of 37.40 mark. We traded lower, we traded higher, and we closed in around the 37.57 mark. But on Tuesday, what's really significant is we gapped up above the 20-day moving average and never really looked back since. You'll notice we've still got some of the power lines on the chart in here, and these green lines. The market, for the most part, is kind of respecting those. The 38.20 level and 38.23 level were just two levels I had my eye on all week. And as I mentioned on Twitter on Thursday, it was a very binary sort of plan as we went into the regular trading hour session, that I wanted to be short below 38.20 and I want to be long above 38.40. And typically what that looks like for me and for my two colleagues is that when, in this particular instance, the price broke above the 38.40, and we would then look for a retest from above. So we then look to buy it on a retest. And when we look into the the zoomed in version of the profile, you can see how this played out. But this was our absolute trade of the week. And we would have played that from the other side as well. So if we had traded down, so on the Thursday, if we had traded down below the 38.20 and it rallied back up, we would then look to sell it, then try and take profit around the 20-day moving average. They were the two trades that we saw on Thursday, and we caught the 38.40 trade really nicely, and we ran it right into the close. So that particular trade delivered about 80 ticks in total, and that would be one of the sort of, we're looking for sort of 1 to 2 of those types of trades that we'd like to try and catch every week, and that was one that we just caught perfectly on the nose. They're not all perfect like that, but that's one that we just caught perfectly, and it just played out exactly as we thought it would. Really, when we start to analyze the market from this particular chart, is we really just say this is business as usual for the E-Mini S&P. There's nothing too bearish out there. The red candle on Friday tells us that, you know, perhaps there were some people taking profit up here, and that's absolutely fine. We've broken above a key level at 38.80, so that's relatively important. But we're starting to get extended away from the 20-day moving average, but we're not getting overly concerned. You know, we may see a retest back of the 38.54 level, and maybe down as far as the 38.40 level. But the first one we would look at would be the sort of 38.54, 38.53 sort of area, to see how the market responds there. When we jump back into our weekly market profile, we have some pretty bad structure from last week and last week's profile chart, and we're kind of in two minds about this, in that the lower part of this particular profile down here, when we look at it, it's very jumbled up and it's quite disjointed, in that we've got quite a large gap in the middle in here, as well as having some single prints down here. And when I look at this, there's part of me that's thinking, given the volume that's transacted across these two weekly profiles, given the volume and the time we've spent at these prices in the two previous weeks, so take between sort of 38.30 and sort of 38.65, that'll be a significant part of the market for it to chew through to the downside, and it's then going to be supported by another one of those zones down here shaded in green, and it's going to take an awful lot for us to get down here. Now again, I never say never, and if we do break below the sort of 38.20 level, then I do think that these levels come into play. We do look to see if we will fill the gap here. So when we look at this week, what I believe to be important, I'm going to just remove this box here. What I believe to be important is this gap in here, and this ranges from, I think it's 37.99 down to 37.77. It's that particular gap in there that I'm interested in, and if we get into the gap and we start to fill out the gap, then maybe these single prints down here could become next targets for shorts or potential pivot areas for longs. And if it does chew through all of that, then again we target this area of balance down here, which is this big huge white box over here. So that's sort of our plans at a bird's eye view to the downside. I think to the upside, I'm going to spend a bit of time next week filling out this particular area in here. So if I'm to mark out the levels, I would say, just eyeballing these would be sort of sub 38.75, probably down to the sort of 38.45 mark, I would say. I'd say if we get down to the 38.40 again, we may test some levels further below. I don't know if we're going to get enough bearish price action to take us below the sort of 38.45. But again, never say never. The reason why I'm interested in that level is because we have the volume point of control for the week previous in here, 38.48, and then the volume point of control for the week previous to that again at 38.44. And I think they are 2 weeks in a row we had overlapping value, and both those prices are close together, which means that they are both very fair prices to do business and the overall time and volume side of things. So I think that's a potentially interesting level in there that we would definitely carry forward into this week. So I think we're going to spend a lot of time filling out this area here, which I'll fill it out in a different color for you. We're going to spend a bit of time filling out that particular area in here. And of course, you know, we're going to have the round number of 3,900 in the front of our minds, and I certainly believe that if the market continues the way it's going, that there's definite possibilities that we would see 4,000 before the end of the month. So when we look across into our daily profile, we can just see what happened last week. So we can see here on Monday that we've opened above this big green box in here, this is the box in the previous chart we looked at. So we've opened above it. The low of the day is literally the high of that balance area, so within a couple of ticks. So just for context, this in here is where we closed on the previous Friday. So during the Globex session, we've gapped up here and we've traded down and we've put in a low at the top of the balance area. That tells us that there's a rejection of going back in there and that we should start to be targeting higher prices. And that's what we got as the week played on. When we go then into Tuesday, we have this big gap in here. So the gap is 37.99 to 37.77. So they're the two levels that we will look for if we do trade back down into this area in here. But this was a significant gap, and this is where we've gapped above the 20-day moving average, which is significant. Then we had on Wednesday, we have had overlapping values. So we've had confirmation that this move higher is being accepted. So buyers and sellers are in acceptance that these prices are completely fair to do business at. And ultimately, again, that's telling us that we are now set up for a further leg higher. And that's exactly what we got on Thursday. And on Thursday, we broke above a key level of 38.40. And where this 38.40 level came from, we will zoom in on the profile now in a minute and show you exactly. This is the high from Wednesday in here. And it is also the low from Tuesday, the 26th of January. So it's a significant level, and it's one that has repeated itself numerous times. So the market has memory for these types of levels, and that was one that we definitely felt could be bought on a retest from above if we broke above it. Then on Friday, we have this sort of consolidation day. Again, we've had a breakout from value, so we've had 2 days in a row of value breaking higher, whereas on Tuesday and Wednesday we had overlapping value. We had a value break on Thursday, and then Friday the further value break. It wouldn't be beyond the realms of possibility that we look to fill in parts of this profile with maybe tagging the high from over here, which would be Friday the 22nd at around the 38.43, 38.44 sort of mark. Again, this particular VPOC in here from a daily point of view, that could wind up being the low point in any sort of a move down. So really business as usual for the E-Mini S&P. What I'm going to do is just show you how the trade on Thursday played out. So we're going to click in here to our zoomed in version of the market profile. What I will do is I will just mark out the 38.40 line, as this was one we literally called out on Twitter. And we can see here on Thursday that we pretty much opened where we closed from the previous day. So from Wednesday into Thursday. And we've opened here this red A in here, and we've very strong momentum straight off the open. We had a little attempt at going lower, but then we drove higher in A and B period. Now, I picked up the trade in B period, and it would be unlike me to pick up a trade like this in B period, as normally I like to let the initial balance fully settle. I like it to be printed before I typically get into the market. But in B period, I put in the buy order on 38.40 on the nose, and I had a stop down here at the high from Monday the 2nd of February. So it didn't have a huge amount of risk in there, so we were really only talking about 4 handles, which is 16 ticks, and the idea was that I would be trying to take this at least to 38.55 and then taking the rest of it up to 38.60. Now we got a really nice ramp in M period, which I'll get to in a minute. But we can see here in B period that we traded down here. I was filled during B period, and then in C period we spent a little bit of time down here and then never really looked back over the course of the day. What was really, really nice is that we got to sort of very late in the day and we were putting in highs in K and J period, where I felt that this may not be coming off, so I took half the position off in here, and I moved my stop up above break even. But then we got a real nice ramp in M period. which took the market higher. And really, if I had stayed in the trade and carried it overnight, I probably could have taken this up to 38.80 in Globex. So you can see here the Globex profile in here. I could have taken this to 38.80 and beyond. So that would have been my long-term target for this if I wanted to hold it, but I'm not hugely keen on carrying things overnight, particularly when we hit all-time highs in a settlement period. So that was one that just really played out really nicely. It's really rare that we get trades like that just set up so perfectly like that. But I think it is really worthwhile to call it out because we wouldn't have been able to do it without the use of market profile. So that's a view of the zoomed in version of market profile. Really, for the most part in this market, most of the key big cap stocks have now reported and the earnings have been relatively well received. So there's no major shocks, we don't think, that are going to come out of the woodwork over the next couple of weeks or so. So we just want to have a quick look at the Nasdaq 100. Nasdaq 100 looking really, really good. Still not too far away from the 20-day moving average, which is down here. Printing new all-time highs on Friday. Nothing terribly worrying in here. We're not getting too overextended. Just a nice gradual grind higher. Still within the channel. It's really nice. And then finally, the Russell 2000. Now, the Russell 2000 is one that we're maybe getting a little bit overextended on. We look at on Friday, we're putting in new all-time highs, and this is on the back of literally 5 straight days of gains. So this is one that we might be a little bit concerned about. It might look to blow off some steam, and if it does look to blow off some steam, we would look at this particular set of candles in here as a potential balance area, and if we took those as a balance area, we would then look to maybe buy the sort of 2163 level, or maybe take it a bit higher, maybe 2172-ish. And so we'd be looking for a retest of that zone, and if we started to get into that balance area, then of course we're back to testing the 20-day moving average from above. But really, for the most part, US markets in relatively robust fashion, really beginning 2021 like the tail end of 2020 in a really positive way. So nothing to be too bearish about. That's pretty much it from us for this week. As always, you can go to our website, sgfutures.com/education, if you want to learn more about market profile. But that just leaves me to wish you all a great week and happy trading.